there's a whole lot of, effort that is being put into, these lessons. And then we want to make sure, oh yeah, someone said market structure, perfect. That's where we stopped. But then, yeah, we are doing our best to make sure that, even, when there's a whole lot of tight schedules and everything, like example is this week, we've been really hooked up. We still try, to come out here and teach you guys, but then it's on your own path, to make sure that you at least watch the lessons over and over again. It will help you to assimilate these things better when you hear me talk about them. Okay, so yeah, so we considered the double bottom last time. And while I did not show you guys an example, let me just clear my chart. Let me go on Euro USD. I'm sure we'll find an example pretty soon. We'll have a whole lot of them, double tops and double bottoms. Uh, yeah, but then this is, a clear example of what I didn't explain this, but then you guys should already know this. Sorry. Yeah, so increase this. Yeah, what's kind of reversal pattern is this? That's the head and shoulder. Okay. Um, yes, I'm looking for the double top to show to you guys and double bottom. Typical example. I'm looking for a textbook formation. So it's clearer. Yeah, I'm not even supposed to look this long. It's something that happens almost every day. And maybe on the 1 hour time frame, I'll be able to see them a lot. But then, yeah, so if we're going to double top here, this will be a whole lot more, the wicks are what gives us the top formation for the second one, not the body, entirely, not the regular textbook setup. But then I was looking for a clear example so I'll tell you guys exactly how this works. But I'm having a hard time finding one. Okay, so let me try to skew in. This will make it better for me. Yeah. So double top here. Top. Oh, sorry. Yeah, so double top here. Right touch, left touch, right? Break of structure, retest breakout, price goes down, right? So typical example. There's a whole lot more. Like I'm just trying to show you guys, how random these things are. This is the 4 hour time frame. So I'm just trying to go back, as much as I can. Let me go to Euro AUD. This respects price action as well. Um, yeah, so what? This is an example. Double bottom, right? Break of structure. Price came back, then movement upwards. Okay. And then it came, look where it came, it came right after what? The impulsive leg here, and then signaled the entry that price is about to change direction and then went in that direction. Okay. So one example. I'm still looking for more. Yeah, perfect example. Look at this double bottom, right? Neckline, right? Break, retest, deeper retest, broke a little into this other structure that we have here. These supply level that we have here broke into it, or demand level, sorry, broke into it, and then price went higher from there, and then it moved higher for some time. So this is how random these things are. They happen in the foreign exchange market a whole lot. Okay. Double bottom. Okay, this is it. Double bottom break, right? We didn't have a retest this time around, which is an example of the risky method to trade this, right? Price broke, and then the only time it retested was when it retested this structure up here. This is a demand level and the supply level in the market, a key level, right? It retested that level and then another impulse to the upside. All right, and then this is the 4 hour time frame. So that means that every single one of these moves that I'm talking about here accounts for hundreds of pips. So like this one we are talking about is 300 and what? 360 pips profit, right? uh, and then it's really random, yeah, we have another example here, right? Double bottom, structure is up here, right? This is where we have the structure. Price failed to break with the right shoulder, broke back inside, and then eventually broke that structure impulsively. Okay, so we did not have the opportunity for a retest to get into the trade, but then typical example, double bottom, which now the game of the foreign exchange market. 1 minute, guys. Yeah, sorry guys, I had to attend to that. So this is why you are presented with multiple opportunities. Sometimes you can decide to go with the risky method, trading right after you've gotten a break of the neckline, right? Or sometimes you go with the less risky method, waiting for a break and retest. But the risk of that is that sometimes price might never come back to your point of interest. And once you've understood that that might happen, you are willing to accept whatsoever comes with it, okay? But then let's move on to the next one. So we talked about double bottom or double tops and double bottoms in our last class. So it's really clear, with regards to that. So let's go straight into the next one. And of course, you do understand that, double bottom, sometimes there might not be, exactly a W formation. Sometimes it might be something like this. Okay. So something like this. I didn't want to talk about some of these examples that are like this. It's a double bottom. Of course, you can plot your this thing here. It's not directly a horizontal level that can be connected. But then maybe if you draw your rectangle larger, it will connect. But then if you use a diagonal line, it's going to connect definitely. So it can happen like that as well. Okay, so I just decided to put that out there. Okay, so yeah, so let's go on. We have the head and shoulder pattern, which is one of the another loft pattern by traders. It's a reversal pattern. Okay, I'm going to explain why this is valid. Okay, and then of course this is the neckline. Okay, so let me stop this from extending to the right. Yeah, so of course that is the neckline. So let's go straight into it. So this is a head and shoulder pattern. This is what the left shoulder, right? This is the right shoulder. And then this is what the neck or the head, sorry, H. Okay. Right, so connected. Yes, so perfect. Once you see this at the at the top, we were having an uptrend, right? And then you spot an head and shoulder like this is a signal that we are moving downwards. And then you should not take any trading decisions until what price has broken, below this neckline. So N neckline. Okay. Why is this valid? I always, like to talk about why something is valid, why it should be that way. So you are seeing it from the perspective of a trader, someone that understands why it works that way, and not a trading strategy or like a pattern perspective that if it happens that you must trade it like this. So we had buyers. So this is, remember we are in an uptrend. Okay, so we are in an uptrend. So do not forget that. So we had buyers, push price up to the level where we are currently at right now. And then they now created this left shoulder. Okay. The sellers now stepped in and pushed price down. Remember that when the sellers pushed this here, this was not a level in the market already. Maybe it may be if we had interactions at that area to the left, but considering that this is a fresh level, we do not have any other thing to this level. So this is just what a fresh demand level. Okay. So the buyers now step in heavy again, and with the same impulse that they used to push price higher, price falls off immediately. Clear signal that the sellers are stepping in heavy. Okay, this is really obvious. So if buyers are putting this much pressure, to break the previous high that we had, which was created by the left shoulder, okay, and then the sellers step in and push price down with that same force as well. This is enough signal to tell you that the sellers are stepping in heavy. Okay, and then what happens after that? The buyers put in a little effort, and then the sellers down them, right, by pushing. Price falls off right after that. Okay, and then breaks below our neckline. It's rational to take a break below this neckline because of what? Price can come here and do what? Move back upwards. This, taking into cognizance, we've not completely broken structure. So if this was structure, right, we've not completely broken structure because we've not created consistent series of what lower highs and lower lows. Okay, so we are not, going in line with what we were originally doing, right, by printing higher highs and higher lows. But then there is a level we are failing to break below. Okay, so as soon as price breaks below this level, it's a rational reason to do what? Take a sell trade. And of course, every other thing still stays the same, like trading at key levels. So what you do is your stop loss is going to be up here. Your take profit is going to be where? Down at these levels, considering what the lows that you have to your left hand side. So all the key levels, all the support levels that you have to your left hand side, you use that for your stop loss targets. Okay. And then depending on the time frame where you see this, you can catch what? 10 pips, 20 pips, 30 pips, 40 pips, 50, depending on the time frame that you see this. Same thing goes for the down scenario. So left shoulder, right? Neck. Yeah, so I'm using, oh, sorry. Let me delete all of that. So I'd rather, let me just delete this because I have some analysis I did that I don't want to lose. Okay. Yeah, so let's go about it like this. So left shoulder, right? Neckline, okay. Then down here, and then up there. Okay, so you can see how I did this. I didn't connect the shoulders to be at the same horizontal level because most times it's not always like that. Sometimes all you use to connect it is like a level like this, but then it's still visible that we are having a head and shoulder pattern, right? Okay, and then this can also look like this. When you are connecting this, you'd have the right shoulder or left shoulder break a little away from the zone that you've highlighted, because of course your zones should not be too large unless you're drawing your zones on the daily time frames. I believe there shouldn't be more than 10 pips. Okay, so that's what I always do when I'm drawing my zone. So I do not make it larger than this. So it can look something like this. You have candlesticks break a little above there and down. That's not your problem, as long as you're able to capture that this is the level that price is failing to break above, right? So yeah, so it can look something like this. And of course, left, right, head, okay, right shoulder, BOS, break of structure, okay, and this is the neckline. Okay, so same idea here. We were in a downtrend, right? This is the inverse head and shoulders. We were in a downtrend, and price came to this level. Okay, so we had the seller's push price here. Price came here, and then there was an impulse, or price left that level to a higher level. You remember that this is higher than what? The previous lower low. Okay, so price now comes, creates a lower high at this point, okay, which now gives us a fresh supply level. Now comes down to this level where we have the head, which is of course lower than the previous level that we had. So this might signal impulse to some people. Some people might get in here after price breaks this level, right? So some people might get in here, some people might even get in here due to fear of missing out, right? And then all of them will be caught in a loss because the buyers buy deeply, back into this level almost immediately. Okay, clear sign that we are what? Rejecting the lows. The buyers are stepping in, and it's not rational to buy at this particular point unless maybe you have a break above the structure and it prints higher. Okay, you can wait for more confirmations, which is the right leg. So price will react at this level because this is now a key level. We had the first interaction, we had the second. Okay, so price now rejects this level because it was what? A fresh supply level. This is now the second trust. So it leaves this level for a little bit, and then what happens after that? Boom, price rallies to the upside again, and then after that, price breaks structure. At the break of structure, there are two ways to take it. Of course, the risky method, right? Stop loss still stays below, and take profit, following if you had like a resistance level here, maybe a resistance level here, you set it there. Maybe a resistance level here is going to be your first take profit target. But as long as the risk to reward ratio makes sense, you can go for it. Okay, so yeah, so you have that there, and then what happens? Or you can wait for a retest of this structure. Once price comes to retest, you can get in now. The only risk of waiting for the retest is that sometimes you might never have a retest, and that is fine. As long as you are trading safely, that is fine. Okay, so yeah, so let's go on our chart and try to spot one. Okay, now that you understand the whole idea behind it, let's go on our chart and try to spot one. Yeah, so I'm still looking for one now. Typical example. Yeah, perfect. So we can see here, okay. So there are tools, that help you show the head and shoulder. So look at, there's a tool here on trading view named head and shoulder. Okay. So all you have to do is connect the first level. Okay. The second one, right? It now does the head for you, right? Then connect the third one and then it prints the shoulder for you. And then you can see clearly that this is what a head and shoulder. So initially it looks very confusing, which I told you guys that sometimes it's not going to look like your textbook setup, but then once you take a look at this, we go on the higher time frame, we're able to, show this particular area. You'd see that what we have price peak at this point, okay, and then price fell off from that level, and then this is the, the next peak that we have. Price falls from that level and then comes back to another level of interest here, okay, and then moves down. So either you identify that with what, with your continuous arrow tool here, okay, and then highlights the highs, and everything, or you use the tool that I just showed to you guys now, the head and shoulder tool. So what you do is first highlight the, the high that we have here, of course, pick the next level, which is the head, and then connect this other level, okay. And then let's look at what happened. So this is the neckline. This is where we have the neckline, okay? And then this is an example of why I told you guys that sometimes price might fall a little below that level, but you are going to look for the zones that we have clear interactions, which is here, here, we understand that price is rejecting here, looking at the wicks that we have to the top side of these two candles. So we can now draw that instead of making this, larger, I told you guys that when you are drawing your zones, it should not be higher than 10 pips, the price enclosed within your zone should not be higher than 10 pips. So let's look at what happened. Once price broke after the right shoulder, what did we have? A clean retest of that level. So if I zoom in, you'd see once price broke that level, we had what? A clean retest of that level where with these two green candles, these two bullish candles. And as soon as that happened, what happened? Price fell off from that level. Okay, and ever since then we were doing what, price has been falling off from that particular level. Okay, so typical example, all we had to do at this particular point was what, the two strategies. The first is to wait for the retest, right? So as soon as price comes to retest that level, of course, you place your stop loss above the level that you have there. Make sure that the risk to reward ratio is worth it. So in this particular scenario, if you look to your left, you see that we have a key level to the left here. Okay, so we can highlight this. So look at the interactions that we have here. Look at the interactions that we have to this place here. If I drag it, you see that we have the same interactions at this point. Okay, so there's a key level there. So that is going to be what, my first take profit target. Okay, and then if we take a close look at this, we are risking what, 39 pips. So look at this area here, 39 pips for what, 122 pips, which is what, a 3.11, 1 to 3 risk to reward ratio, 1 to 3.11 risk to reward ratio, which makes sense. So you can get into the trade. Okay, so perfect. And we would have won this particular trade all from what, the confirmation that we were what, in an uptrend. And then instead of printing series of highs and lows, right, higher highs and higher lows, we started consolidating at a point. And then after we waited for some time, we were able to see that this is what, a head and shoulder. And then we waited for what, a break of structure. And as soon as we had the break of structure, we got in at the break and retest of that particular structure. Okay. Another way to trade this, of course, would be the risky method. So the risky method is as soon as we had this break, with this red candle that we have here. So as soon as we had that break, with this particular candle, we would have gotten into the trade. And then, with both of those strategies, you would have seen that we wouldn't have lost any trade. Okay, using both the risky method and the less risky method. Waiting for the retest to happen is just to have extra confirmation, right? That price has come back to your level of interest and it's probably going to sell off from that level. Okay, so that is it for. Hello, can you guys hear me? Someone is saying he cannot hear me anymore. Can the rest of you hear me, please? Okay. So GCFX says he can hear me. Oluwa Junwolo, please, Alabi, please check if it's from you. Make sure that you've joined with the microphone. Every other person says they can hear me, please. So make sure that you your microphone, you've joined with your network. Okay. So about 5 people say they can hear me, so I can just move on right now. So yeah, so let's look for another example. Okay, I'm looking for another example, and then you can see how random these things are. So I can just hop on my chat and show you guys an example because I always want you guys to be exposed to the real market scenarios of how these things look in real life. Okay, so yeah, that's not a perfect example. Okay. Yeah, so I can't find any other thing, but then I am from the idea that you guys have seen now, you can hop on your chat, and look for an example from your by yourselves, and then eventually send me one. Let me go on another chat. Let's go on EuroJPY. Okay, let's go on EuroJPY. The Alabi is still complaining. Please, exit the meeting, right? And then come back. So just leave the meeting and then come back. I'm sure you'd hear me when you come back. Okay, please do that, so you can come back and interact with every other person in the class. Okay. Yeah, so this is EuroJPY. Let's try to see if we would find one together. Okay, typical example of a double bottom here, right? So first interaction, second interaction, and after break of structure, price went up, right? So while we are just going through, I'll try to spot as many of these things as we can see. So you guys see how easy it is to see these things and to trade them. Okay. Yeah, so perfect. So yeah, let's take a close look at this. So look at the leg that we have here. Look at the lowest point of that particular move here. Price went higher for a little bit, came back down, came lower, and then what did we have after that? A breakout. And this is an example of the head and shoulder pattern that I told you guys that it does not have to be connected horizontally. So if we use the same tool, right, we drag this from the top here, connect this, right, half the head, put these other price into consideration, and then price moves up from there. You see that we have what a clear head and shoulder pattern. The only difference is that this is what we are now connecting the headline what diagonally. Okay, so this is the neckline right to the left for the left shoulder. This is where it interacted with the head. This is where it interacted with the right hand, right shoulder, right? And then as we had the break of structure, price now started moving upwards from there. Okay, and then if you can combine this idea that you have right now. Okay, so it's good that these things are happening, so you can see the different variations, how these things look in real life. So if you can combine this with the idea of key levels in the market, okay, and then we're able to draw out our key levels that we have. Okay, so the first key level, I was able to find that out from the interaction that we have here, and then this is the second key level. As soon as price broke this structure, if you could not get in here with the risky method, waited, right, price went higher and then came back to a key level, a key horizontal level in the market, then you would have done what? Gotten in at this particular point. Okay, and then your stop loss is going to be where, of course, below one of these levels, and then your take profit is going to be considering the first high that we have here, and then you can extend your profit target, and then easily you would have been able to make more than what? More than, this is 577 pips, right? And then I can still go higher, and then you see that price ran for what? 661 pips here, clearly from this particular information. Okay, so Alabi, if you can't hear me, please, the message, the class will be recorded and sent in the chat, so you'll be able to access it later. Sorry about that. Every other person can hear me. I'm really concerned, right? But then there's nothing I can do to help you at this particular point. Okay, so this is it for the head and shoulder pattern, and then you understand the double bottoms and the double tops. The same thing works, for the, I've shown you guys the head and shoulder, I've shown you the inverse head and shoulder. This is just how it works, in real life. So if you have any questions regarding this, you can ask them now and then I'll answer. But if you do not have any question, of course, I'll move on to the next topic immediately. Okay. So yeah, let's consider the next thing. We had a class on gap trading. Okay. If most of you remember, we had a class on gap trading. Okay. But then, okay, I sent the Zoom class for that. So let's go into wages immediately. Okay. So yeah, so keeping up with the names of these things, are really tasking. I told you guys, focus lays on the names, focus less on looking at it from a pattern perspective, and then look at it more from a structure perspective. Okay, what kind of candles are we forming? Are we creating highs? Are we creating lows? Trust me, it will make a whole lot of sense to you when you begin to understand it from the concept of structures. So instead of creating highs, right? So instead of creating highs, we are stuck at a certain zone. Okay, and then you can now make an understanding from this. Okay, so this is a level in the market we are failing to break, right? Looking at this, right? Probably we broke out before, and then you now understand that this is the head, left, right? And then you look at another level lower that we are failing to break, right? As soon as price breaks here, we are certain that what price might continue. Okay, price might continue. So that is a clear example. Okay, That is a clear example of understanding the market behavior, how the market moves, understanding structures instead of trading these things from a pattern perspective. Okay, so what are wages? Basically, wages are continuation patterns most of the time. Okay, but then it can also be used as a reversal pattern. Okay, that's how wages work. We have the rising wage and we have the falling wage. Okay, and then what you can observe from wages is that, okay, you can also call the ascending wages rising wages, right? Okay, and then compared to other chart patterns, it exists both as continuation pattern and a reversal pattern. So this is how a wage looks. Okay, so price will make a move up. Okay, and then we have something like this. Okay, so it's closing up, just like a triangle. Okay, so yeah, so price is moving higher, and then at a particular point we start having formations like this. So it's closing up, right? Just like a triangle. The closer it gets, the thinner the lines come together. Okay, this is an example of a wedge. Okay, this is an example of a wedge. Okay, this is how it looks. Okay, and then there are two things bound to happen. Either it does what falls from this level, okay, which now makes it what a reversal pattern. Okay, or it does what it breaks above this level, which makes it what a continuation pattern. Okay, so we are going to look at both of these. How do you know what exactly is going to happen? Okay, when you are in a wedge, if it's going to fall lower or it's going to fall higher. Perfect. This is, of course, you can use your key levels. You can set, once this closes up, at this particular point here, the difference between the top wage and the lower wage, right? These trend lines that we have here might be a difference of what's just 10 pips. Okay, at this particular point, you can use your alert to set an alert maybe 10 pips away from the top side, 10 pips away from the lower side, so that in case wherever we have a breakout, you are able to or you are able to be kicked or triggered into the move. Example is like the Bollinger squeeze that we had. Okay, but then if you are trading this as a trader that wants to understand how this works generally, you wait to see the candlestick confirmations that you have. Okay, so once you have a breakout from one side, so we'll have a breakout of this level right here. Once we have the breakout, with one candle, you can get in here, with a risky method, especially, if you have a retest of that level, which I'd always advise you guys to do. So have a break of this level and then price comes back to this level to retest it. Perfect for an entry. We understand that that's now a reversal pattern because initially the leg that led to this is what? An uptrend. Okay, and then if we have, a break above here, a break higher, you can wait for a retest as well. Okay, you can wait for a retest as well. And then as soon as you have the retest, you can take the trade higher. Okay, typical example as well. Okay, so these things, there are two scenarios that it can happen, can either be as a reversal or as a continuation pattern. So the first thing you should do is do what? Wait for the breakout of this particular flag that you have right now. So either to the upside or to the downside. And then as soon as you have that, wait for price to come back to that level to retest it. Or wait, if price eventually leaves and does not come back, right? You can wait for price to come back to any of these structures that you have here. Okay, so any of this supply or demand level, as soon as price comes back to those levels, you can do what? Get into an entry and then write the trading profit. Okay, so any of these scenarios are bound to happen. So quickly, let's go on our chart and try to see if we can spot one. Okay, these are really hard to spot, because they happen, they rarely happen. Okay, so let's look for a clear example, and then I'll show it to you guys, what you would have done in that particular scenario. Okay. Yeah, perfect. So I'm still looking for one. Okay, yeah, so I can't find any example of a wage on this particular currency pair, but then I'll look, I'll go through it this now. You have all the examples in the chat in the class, right? And then I've just shown you guys, an explanation of it right now. So of course, whenever you spot one, you'll be able to know how it looks and what to do when you see it. But then if I see one, maybe this evening or something, I'll send it to you guys, okay? I always try to do this at random, just go on my chat and see them so you guys can see how often these things appear. But Wages rarely happen, they rarely happen because it's really hard to see price thin up at a certain level. So you need to understand that price is no longer moving, as it should. Okay, so at that particular point, it is stuck, right? And then what something that usually affects this is when we have a fundamental impact in price. Okay, so price has gone way too high, and then it's the buyers are, let's take an instance right now. So there is an impulse, right? And that is caused by fundamental impact, and then price moves higher, and then price has come back to a certain level that it shouldn't go lower, right? Maybe like a psychological level, and then price just keeps bouncing off these levels, right? And then people have taken orders because buyers feel that price has gone for too much, right? There's been a very huge impulse, and then they're expecting price to come down to a level of interest, maybe a demand level lower, right? Because if price goes higher, it should come back down. Okay, and then the sellers will not feel safe taking this because price has gone way too high. So there are not enough orders, to push price to one side. So you'd have this sort of movement. So a little bounce up, a little bounce lower, and then it thins up and thins up, and then eventually we'll have a break to one side. So it rarely happens, but then when it happens, you now understand how to trade it. Okay, so that is it for trading the rising and falling wages. Okay, wait for the breakout, either to the upside or to the lower side, and then once you have the breakout, you know what to do from there. I usually wait for a break and retest. Okay, it's better to do that. And then on to the next one. This, we've talked about this over and over again. You guys already understand how this works. And then these are channels or rectangles, okay? So price, will have an impulse, and then price is now stuck at a certain zone, okay? And then you already understand that this is the continuation pattern, okay? So this is how it looks. So we're in a downtrend, right? Okay. And then you need to understand that every single one of these retracements, right, can either come in form of, any of the continuation patterns. So either as a flag, either as a rectangle, either as a wedge, okay, either as what other continuation pattern have we considered so far? So flags, rectangles, wedges. There is a whole lot of them, right? And price will now, come in this pattern. This is the kind of retracements that we have. So price will not just impulsively go back. If you start having an impulse that goes back and probably tries to counter the previous trend that we had, that means that probably we are changing trend. Okay, so these are examples of continuation patterns. So once you see them, you know that we are bound to continue to the downside. So an example of them is what the rectangle that we have here. So price is just moving within two levels, right? So the support and resistance, okay? And then you remember that the first thing that you need to do is what? Trade in direction of the trend. So there are two ways to trade this. So once you have the first touch, you have the second touch. Of course, once the third touch comes, you understand that we are in a downtrend. You can always take a sell trade. The fourth touch, take a sell trade. The fifth touch, what? Take a sell trade. And then once you eventually have a break, you can wait for either a break and retest to trade it. My favorite method of trading it, or then the risky method. As soon as we have a clear break above the structure below, above the support level for a downtrend, you can get into a sell trade, okay? And once you have like two candlestick closures below that level, and then write it considering the key levels that you have to your left hand side, okay? So this is it, same thing for the uptrend, okay? We've talked about this over and over again, so I'm going to look for maybe one example, okay, and show to you guys. So typical example. So after an impulse, this usually comes after an impulse, okay, and then we are stuck at a zone, okay. So you are able to identify the highs, okay, that's the resistance, and then the support level, okay, and then you have to take a trade in this particular scenario. Maybe every time price comes down to the support level, take a buy trade to the resistance, take profit, comes back down, do the same thing, right? You can do that. That's a way to trade it, and then eventually the best way to trade is to wait for what? The breakout. And then once it breaks out, you can do what? Take either the risky method. As soon as we have two candlestick closures above, take a buy trade, or then once we wait for a retest, we can take a buy trade. Okay. So yeah, so let's look for an example. Okay. Yeah, so let's look for a market that trended for a really long time. Yeah. So this is it. Okay, so uptrend, right? We were in an uptrend, so series of highs and lows, and then first interaction at this level, second interaction at this level, we had like a breakout of that level, and then this is the third interaction. This is one of the reasons why you should never trade against the trend, right? Because if you got into a sell trade here, you would have been slammed. because price rallied right after that. Okay, and then look at what happens when price breaks that level. Okay, look at what happens. Price did what? Broke that level. Okay, and then we had a very short retracement or retest of that level with just, you know, 2 candles. You know, if I zoom in, you see that. Okay, as soon as price just broke that level, it just retested that level, and then what happened after that? Impulse, boom, to the upside. Okay, so typical example. Okay, that's one. Let's look for another example, you know, how this works. Okay, and then before I leave that, you know, you could have, you know, of course, you would have traded this third opportunity. Once we had the third touch, of course, you had to buy at the support, because what we are in an uptrend, right? So you had to buy at the support here. You would have taken a trade at the support and then taken profit at the resistance level. That would have been your first, you know, profit that you would have made from this trade, and that would have been what? A 289 pips profit. That's if we didn't buy straight into the resistance, because if we did, it would have been a 300 plus pip profit. Okay, and then right after you had the breakout, you would have gotten into the second move. Okay, so typical example. Let's look for one more. Okay, sorry, network. Do I go on another pair? Okay, yeah, so this is GU. So let me zoom out and see if we can spot one quickly. Yeah. Okay, so I'm having a hard time seeing one right now. Okay, but then yeah, I would have considered this. Okay, this bar here, but then this is not a typical example because we weren't trending upwards for a very long time, so I won't advise you to trade that. Okay, so yeah, so perfect example. Okay, so price is in a downtrend, right? So price is in a downtrend. This is I don't know how I'm going to fit this on my screen. Okay, so price is in a downtrend, right? And then we get stuck at a zone. Okay, so yeah, these are the highs, right? And then these are the lows. Okay, remember these are the we are in a downtrend, so of course you are looking for opportunities to sell this. So first touch, second touch, you would have sold here. Okay, made profit from what? From this particular move here, for what? 500 plus 600 pips. Okay, and then eventually once we had a break below that level, let's look at what happened. Okay, so a break below that level, price came to retest that level, but did not completely reach that level. Okay, so did not touch that level completely. But then this is a typical example that most times price will always want to attempt to touch that level. The impulse was just so much, right? But then a sell trade from this particular